Hello Stock Fox family, I'm Stock Fox and welcome back to my channel. Well, today we're going to be discussing how I lost a lot of money indirectly with the FTX collapse. We're going to dive deep into that here in just a moment. But before we do, I just want to thank all of my subscribers out there who subscribe to my channel and watch my content. For those of you who are watching for the very first time, please do consider subscribing and don't forget to hit the like button. For those of you who are also out there who would like to support the channel, there are a link. I left the link down below, and you can also consider sending a super thanks. Now, let's dive into how I lost a lot of money. Well, how I lost the money with the FTX fallout is indirectly. As most of you who watch my channel know that we talk a lot about Mara, RIOT, and other stocks as well. But the crypto space is somewhere where this particular channel pretty much dives into. We like to discuss mining stocks, which we're going to get into here in just a moment, and how I lost this money. But before we do that right there, I want to kind of have a little bit of a backstory here into Sam Bankman-Fried and the FTX collapse. If you haven't already, please do check out my previous video. I'll leave a link down below for you to do that. So let's go ahead and dive into the collapse of FTX. As you can see here in this article, it says why the FTX collapse has plunged the crypto world into upheaval. Now, how did one of the largest crypto trading exchanges fail? Can customers get their money back? And what does it mean for the cryptocurrency industry? Most of you out there who have lost money and who's been tracking this particular fallout from FTX may be asking yourself these exact questions right now. Let's go ahead and dive into it here. It says the cryptocurrency world was plunged into chaos this week with the stunning fall of FTX. It says the crypto exchange, once valued at some $32 billion, that on Friday had announced that it was filing bankruptcy. Now, we all know pretty much exactly what transpired up until this point, which is that days earlier, Sam Bankman-Fried had reached out to the CEO of Binance and basically was going to broker a deal where Binance was going to buy FTX. We also know that Binance backed out of that deal because once the financials were sent over, they began to do their due diligence and into FTX. They realized that that was not going to be a good, not only a good partner, but not going to be a good investment for Binance. Now, it says right here, it says, so Binance then backed out of the plan basically that Wednesday after Fried had reached out to him. Now, after disclosing that the review of the FTX books had unearthed mishandled customer funds and amid news reports that U.S. regulatory agencies were circling the smaller exchange, obviously Binance then made the decision ultimately not to basically buy FTX. Now, it says the sudden collapse is being referred to as the crypto industry's Lehman Brothers moment. Now, most of you probably know exactly what transpired back in 2008 when basically we were dealing with bad asset-wise loans, or in this case right here, Lehman Brothers pretty much backing assets using subprime loans, okay? I don't know if I necessarily agree with this particular analogy. I think that there are some things that you can possibly look at here and point to that transpired back in the '08 collapse of the mortgage industry. I'm thinking more along the lines of Bernie Madoff. When I read into everything that transpired here, and I have done my homework and due diligence here, from what I understand and just looking at it from the outside, it appears to me that that this individual basically allegedly used FTX and Alameda for his own personal gain and sort of like his own personal piggy bank. Okay. Now, as always on this channel, I advise anyone to do their own homework and due diligence and come to their own conclusions. Because anything I say is not a suggestion for you to buy, sell, hold, or trade any cryptocurrency or any stock as far as that is concerned. Now, let me go ahead and just continue with my thoughts here. And that is that the reason why I say Bernie Madoff is because, see, Bernie Madoff basically did the Ponzi scheme, right? So he basically just stole money from people who thought they had legitimate investments, but really never did. Okay, and so I kind of liken what Bankman-Fried did here, kind of similar, because this particular exchange and platform was basically built on smoke and mirrors for the most part. And I'm going to go on here to kind of enlighten you about some other things that I've discovered here that may make you think a little bit harder when it comes to, is Bankman-Fried the only one here that we need to be looking at surrounding this collapse? Or is Bankman-Fried the only one who's going to take the fall, if there is a fall at all to take? Okay, but let's go a little deeper here into exactly what's transpired here. Now, over here on CoinDesk here, there was an article written here. It says 8 days in November, what led to FTX sudden collapse? Or was it a sudden collapse? Was it only sudden because we just heard about it? Okay, we just felt the immediate impact of it, in our bank accounts. So are they referencing sudden from that standpoint? Okay, it says financial year and influencer Sam Bankman-Fried flew exceptionally high during the pandemic-driven crypto bull market. Now, here's what led to his fall and why it matters to the industry's future. Okay, so let's take a look at it here a little bit deeper here. It says the past week has seen a dizzying downward spiral for Sam Bankman-Fried, a huge crypto empire. It says Bankman-Fried's FTX crypto exchange has paused withdrawals and a tentative bailout from rival Binance appears to be kaput. Yeah, I think that's a really nice way of putting it when you send your financials over and the reaction is that thanks but no thanks. Okay, and I love the way they put this. This past week has seen a dizzying downward spiral for Sam Bankman-Fried. I just wonder just how dizzying it really is for Sam Bankman-Fried. Is Sam Bankman-Fried somewhere, in a dark room crying his heart out, or is Sam Bankman-Fried basically sitting somewhere poolside with some fruity drink in his hand with a pineapple hanging off of it, and living and enjoying life as he normally would, right? So let's take a look here. I found this article right here. Let's see here. So this is an article here on The Guardian. And it says right here, it says Sam Bankman-Fried's $40 million Bahamas penthouse reportedly up for sale. A $40 million Bahamas penthouse. Now, this is a picture of Sam Bankman-Fried here, basically back in when he was basically called up for hearings on the crypto space in Washington, D.C. But the article itself was written not that long ago. Okay, so again, Sam Bankman-Fried has listed his $40 million Bahamas penthouse reportedly up for sale after the scandal, right? It says Sam Bankman-Fried's crypto trader entrepreneur at the center of the FTX scandal reportedly put his luxury $40 million Bahamas penthouse up for sale on Friday, the same day the cryptocurrency exchange filed for bankruptcy. Well, I don't know about you, but if you're still living in a $40 million penthouse and supposedly you're broke, something doesn't make sense. It doesn't pass the old smell test to me, right? You see, I don't think Sam Bankman-Fried is broke at all. In fact, I'm not even so for sure if any of the money was lost. If this is nothing more than smoke and mirrors here, money being moved around in secure wallets that cannot be tracked. The one thing I can really hope for is that Sam Bankman-Fried and FTX and all of the other cronies out there that partaked in this right here will get their day in court, right? I would love to see him stand in an American courtroom and have to justify these dealings here that transpired. Because I lost a lot of money behind what Sam Bankman-Fried did. And I'm sure a lot of you out there also was impacted by the decisions that he made with FTX, right? So even though I didn't trade on FTX, even though I didn't own any of the FTT tokens, but I was affected indirectly through some of the mining stocks with some of the decisions that he made, causing the ripple in the cryptocurrency space, which we're about to get ready to get into here in just a moment. Now, so again, we got Sam Bankman-Fried trying to sell a $40 million penthouse in the Bahamas. It says Bankman-Fried 30, right? He's a very young man, 30 years old, is believed to have lost close to $16 billion in 8 days and is now facing investigations by U.S. authorities. FTX was frozen by Bahamian regulators on Friday. Reports suggest at least $1 billion in investor assets are missing. Well, I've read other reports that suggest that there's a whole lot more than $1 billion in assets missing. Okay. It says right here that there's a real estate broker for the 12,000 square foot 5-bedroom residence said on Monday that the penthouse was put up for sale. It says the news outlet Semaphore, which counts Bankman-Fried as an investor, said current and former FTX employees confirmed his ownership in said property. Okay. Well, you see, when Sam Bankman-Fried did what he did, which is pretty much, in my personal opinion, lie, right? Because that's what it really gets down to. He lied about pretty much everything, right? And this is what basically brought out the demise of FTX. Now, it says right here, the question to answer in the coming days will be what happened and why did almost nobody see it coming? See, I've had an opportunity to really think about this. And my thoughts are, is Sam Bankman-Fried this genius, this wizard out there? Is Sam Bankman-Fried such a genius and a wizard that everybody out there, all of the smart money guys, those in this space, allowed such negligence to take place? But what is puzzling to me is that all of the smart money people out there put their money into FTX. They were investing in FTX. So something doesn't pass the smell test. I'm a retail investor like most of you are watching this channel right now. There are just certain things we're not going to be privy to. There are just certain things that we don't have, the access to, because we're not in the know. We're not the who's who, when it comes to the crypto space. We don't have the sizable bank accounts out there that will lend to us being able to have the insight that some of these big institutions have. So that brings me to this particular question around this whole collapse of FTX. If smart money had their money invested with Sam Bankman-Fried, would they not have known that this was all smoke and mirrors? Wouldn't they have done some homework and due diligence that this was being propped up and that this is possibly a potential Ponzi scheme? So it does question here, is Sam Bankman-Fried the only one? Is he the only one who's to blame here? Or is there other people hiding in their closets right now, hoping that Sam Bankman-Fried never steps foot inside of a courtroom because they too may be found out as to what their involvement was in this particular scandal? I don't think Sam Bankman-Fried was the only one. I think Sam Bankman-Fried was the only one who's left standing where we could basically point a finger to, because someone has to be held accountable. I just happen to believe that there's more than just Sam Bankman-Fried who needs to be held accountable for this particular collapse. Let's take a look further here. All right. So we know exactly what transpired here. It states right here that there was a liquidity crunch, which implies undisclosed risk. Well, let's just see what they're saying here. It says the facts first uncovered by CoinDesk played a major role in the events of the past week. It says on November the 2nd, think about that, November the 2nd, reporter Ian Allison published findings that roughly $5.8 billion out of $14.6 billion of assets on the balance sheet of Alameda's research, based on the incurred valuations, were linked to FTX's exchange token FTT, which I didn't own any of the FTT tokens. All right. Let's take a look a little bit further here. But before I do that, let's go back here. 5.8 billion out of 14.6 billion in assets were linked to just this token alone. Okay. Now, this findings based on leaked internal documents was explosive because of the very close relationship between Alameda and FTX, which we both know were founded by Bankman-Fried himself. Right. So remember, the article is written back on the 2nd. Right. Now it says, and there has been significant anxiety about the extent and nature of the fraternal dealings. It says the FTT token was essentially created from thin air by FTX. Think about that just for a moment. I mean, when you think about Sam Bankman-Fried creating a token out of thin air, right? Assessing some sort of a value that basically is really unknown, so who determines the actual value of the token, right? So I'm a little bit lost when it comes to creating a token out of thin air and assessing value to it. If you know exactly how the value was actually put on the FTT token, please leave a comment down below. Certainly would like to know that. But he basically created this out of thin air, right? And you saw earlier in the article that the values of the tokens were assessed to be some $5.6 billion, right? That's an awful lot of money for something that was just created out of thin air. And that is pretty much almost half your assets balance sheet, right? Assets that you have on balance sheet. Now, it says negative speculations around the financial institution can be self-fulfilling, right? So let me go over here. Let's make sure we're back here. So it says negative speculation about a financial institution can be a self-fulfilling prophecy triggered by withdrawals of a sense of uncertainty, right? So, I mean, we kind of get all of that. And it says, since publication of Allison's initial story, it says CoinDesk reporters have been advised to practice extreme caution and diligence in reporting about FTT. Almost sending a warning to someone out there saying, be very careful about how you report on this and other matters at Alameda and FTX. Now, but sometimes straightforward facts are enough to trigger an entirely justified bank run, right? Was it? It says seemingly because of the unknown close ties, worries about Alameda's balance sheet translated into a rapidly accelerating mass exodus from FTX. It says the exchange saw $6 billion in withdrawals in 72 hours before things reached a head on the morning of November the 8th, according to internal messages seen by Reuters. Wow. Now, let that sink in for a second here. There was a bank run, right? There was a run on the bank for $6 billion in withdrawals. Before the street knew anything, or retail investors like me and you, before we knew anything, there was a run here of $6 billion, supposedly some 72 hours before the street knew anything, which is pretty much the 8th or the 9th, right? So we got 70. So this would have taken place probably around the 4th or the 5th, right, of the month, right? So we begin to find out everything somewhere around the 9th, 10th, 11th, somewhere around in there. But this was 3-4 days earlier, right? So things reached a head on the morning of November the 8th, right? So we now know that things begin to reach a head on November the 8th. Let's go back here and take a look, right? So again, $6 billion in withdrawals in 72 hours before things reached a head on the morning of November the 8th, according to internal messages seen by Reuters, right? I have to ask a question. Who are the people withdrawing the $6 billion 4 days in advance or 3 days in advance of anybody knowing about it? I think this is just smart money. Smart money. Did Sam Bankman-Fried withdraw $6 billion? Or were there other people that Sam Bankman-Fried had whispered to, kind of told them, hey, this is a situation. Things don't look good right now. We're going down at the helm, boys. Get out while you can. Did the money start kind of moving, going to different wallets, secure wallets, untraceable wallets, right? We know it disappeared. There's no accountability for it. Who are these people that took the $6 billion in withdrawals? This gets back to my original point when I said I don't think Sam Bankman-Fried is the only one who's involved here. I think there are other people who knew about this. I don't know if you recall, but in the documentary on Bernie Madoff is telling his sons, and I could be a little bit off on how it actually went, but I think Bernie Madoff tells his sons, after he tells them that basically what he had been doing all these years, and that it was fraud and that it basically was a Ponzi scheme. He tells his sons, don't tell anybody this. Give me a few days to straighten things out. I need to make some people whole. Basically who's been good to me, right? It's in so many words. I wonder was Sam Bankman-Fried, trying to make people whole who were maybe not good to him, but maybe supporters or investors who knew exactly what this was all along. And when they were given the opportunity to take their investment out before the what hit the fan. And we all know what hit the fan, right? Think about that. Let that sink in for a second. Okay. Now it says, according to CoinGlass data, that for the time left, FTX with the balance sheet of unbelievably just one Bitcoin. Well, I don't believe any of that, to be honest with you. Just smoke and mirrors, to be honest with you. I wouldn't believe anything that Sam Bankman-Fried sent over. If he sent something over that said paperwork to show documentation that he only had one Bitcoin left, on his balance sheet, after all this was said and done, no, I would not believe that. We need to get Sam Bankman-Fried under oath. That's what we need to do, right? We need to get him under oath, and we need to get him under oath in a courtroom here in this particular country, right? That's what needs to happen. It says the rush to the exits reportedly led Bankman-Fried and his legal team to begin frantically shopping for an acquisition partner, approaching a variety of potential partners before Binance entered the picture. Well, so can you imagine Sam Bankman-Fried frantically running around after he's probably already told people to take their money out because he already foreshadowed this. He knew this was coming, right? It says it remains worryingly unclear, though exact when even such a dramatic rush of the exits would have led FTX to seek its own bailout. It's very unclear. I would say that it's so unclear that these are nothing but just flat out lies. That's how unclear it is, right? Let's take a look a little bit further here. It says the crisis also seemed to validate anxieties that the Alameda immense holdings of FTT-linked assets meant for the stability of Bankman-Fried's empire. It says the market value of the token is down more than 80% over the past week. Late in the day of November the 8th, after the announcement of the tentative deal with Binance, FTX said it had officially suspended all crypto withdrawals. So you give the smart money or the institutions or the people you need to make whole, you let them get their money out, and then on November the 8th, you seize all funds. You seize all funds from anybody else being able to withdraw any money, transfer tokens, sell their tokens. You basically froze all assets, right? Which basically at that point is when so we got criminal activity allegedly taking place prior to. Now we have more criminal allegedly activity taking place on November the 8th because now you're freezing everybody out, right? And then afterwards, what happened is that more money continues to come up missing, right? And again, will he have his day in court? Is there an opportunity here for us to bring Mr. Fried to justice around this right here. I don't know what I see when I look at Sam Bankman-Fried. Other than someone who seems to be a little bit smug. As I said before, my brain is bigger than yours. And therefore, I hold pretty much all the cards. And in this case, Mr. Fried held all the cards. All right. He didn't let anybody take any money other than those who he deemed to be either investors or people who smart money, if you will. All right. Let's take a look here at Bitcoin. And the reason why I want to take a look at Bitcoin here is that I want to do a timeline in regards to exactly where I'm going to do a timeline here exactly where Bitcoin was at the time FTX began. These troubling messages began to surface about what type of trouble FTX was in. So let's go over here and let's take a look here. All right. So here's Bitcoin, right? So we're going to go back 30 days here. So let's just set up here, November the 5th, right? All of the stuff hit the fan on November the 8th. We're going to go back to November the 5th. They said 72 hours before Sam Bankman-Fried was basically pretty much allowing smart money to sell their tokens, right? Allegedly, right? I just showed you the article showing that $6 billion 3 to 4 days prior to November the 8th had basically left FTX, right? What was the $6 billion? Who did the $6 billion belong to, right? And for all we know, it could have been a whole lot more. We're having to take the word of a liar for the most part, right? So, go figure, right? So we have what he's pretty much giving us, plus research, and that's basically being done by other third-party entities. But let's go here. So we go back here to November the 5th, which is when it happened. Okay, Bitcoin's trading at $21,301 and change on November the 5th. That is a Saturday, right? Now, let's go down here to the 9th, which is pretty much about 72 hours fast forwarding it, right? We now know that Bitcoin lost 26% of its total value in that 72-hour window, right? So remember, it's trading here at $21,000 and a coin, and now we have lost more than $5,500 per coin, right? All during the time frame that Sam Bankman-Fried allowed. Allowed those to move money, or as they would say, customers made a run on the bank, right? They made a run on the bank. Who made a run on the bank? Why did they make a run on the bank? What did they know? All right. When did they know it? Who told them that they needed to make a run on the bank, right? Those are the questions that needs to be answered. Those are the type of questions that, and why we need to get Sam Bankman-Fried into a courtroom, right? Because I want to know who these people are. I want to know who these people are who are hiding in the shadows. Don't want their names mentioned because they may have been a part of the whole scam, right? They may have been a part of the alleged Ponzi scheme that that transpired here, right? So as you can see, this impacted Bitcoin greatly. And if Bitcoin is impacted greatly, guess what else is going to be impacted greatly? Well, let me share with you what's going to be impacted. Stocks like Marathon Digital will be impacted. That's who's going to be impacted. I happen to own thousands of shares of Marathon Digital and RIOT. So when Bitcoin is impacted by the fallout of FTX, then Marathon is going to be impacted. So that's why I stated that I was indirectly impacted, right? So it will be different if what Sam Bankman-Fried did affected only FTX customers, but it didn't. It affected the whole crypto space. Everyone in crypto was affected by this, right? So let's just take a look at the timeline here. Here's November the 2nd here, which is when that article was actually written first that started all of this. Marathon Digital was trading at $10.92 a share, right? But now $10.92 a share on November the 2nd. Now, of course, here on November the 4th, which is supposedly when the customers begin to make a run on the bank, right? Supposedly, allegedly, they're making a run on the bank. We still don't know why they made a run on the bank. We still don't know, what that was about, right? But all of a sudden, somebody was spooked enough to transfer $6 billion in tokens, right? Just out of the clear blue sky for no reason, right? So $10.84. So let's take a look here. So at $10.84 to November the 21st, you're looking at a 42.9% drop in Marathon Digital, right? A 42.9% drop. Where did that put Marathon? It put it at close of business at $6.19. I know for a fact it traded down in the fives doing intraday because I sat here watching it trade, right? And you're probably asking yourself, well, did you buy any stock, Fox? No, I did not. I did not buy any Mara. I did not buy any Riot. I did not buy any more HUD because it gets to a point to where, sometimes it's better to just sit on the sidelines, right? And let the dust settle. Sometimes it's best to just do it that way. And so I chose not to pick up any additional shares because I don't know just how deep this fallout's going to be, right? So was it tempting? Of course it was. But right now I decided to hold off. So again, $6.19 a close here. You can see it bounce back a little bit here, but still beginning to trade down. So pretty much still trading down in this low of $6 or somewhere close to that. It is trading at $6.20 in after hours as of close of business on November the 25th. Okay. Now let's take a look at Riot here. All right. So again, as you can see how you could be impacted and affected, and now you know why I lost so much money behind Sam Bankman-Fried in the FTX collapse. All right. So let's also follow Riot here. Now let's find out exactly where Riot was on November the 2nd. $5.87 a share on November the 2nd here. And again, guys, this is if you are to believe that this is when it started. For all we know, there could have been whispers amongst Bankman-Fried and smart money and the smart money investors, which is the institutions out there. There could have been whispers amongst them all along leading up to this, knowing what was going to happen. I am of the mindset, my honest personal belief here is that they knew. They knew because there's no way you could not have known. There's no way that it just doesn't pass the smell test here. The whole setup, it doesn't pass the smell test. I believe that they were allowed to get their money out. I believe that they knew that something wasn't on the up and up, but they were willing to go along, play along, get along, you're right, for the sake of profits. That's what I believe. $5.87 on November the 2nd here. And as you can see here, November the 2nd, this thing pretty much collapses here at down 32% on November the 22nd here, which is basically trading at $3.99. I want to say intraday was somewhere around 378-ish. I think I recall it seeing there. Again, I decided not to buy in. I'm sitting on the sidelines, and no, I have not sold my shares. I still hold thousands of shares of Riot and Mara, and I don't have any intentions at this time of selling my positions in either stock at this time. If indeed something changes, I'll certainly put a video out to let you know. As you can see, Riot has bounced back somewhat here to 442, closing down at 439 in after hours. As you can see there. You know what? I found something out here. This is an article that I'm going to share with you that may hit home a little bit here. This is by The Guardian, and I thought it was something that you needed to see. I think everybody needs to see this, especially if you're a retail investor here. Let me read just a little bit of this right here. We're going to move on here very quickly. It says, the money is gone. People who lost out in FTX collapse. It says smaller investors tell how they found themselves unable to withdraw money as rumors of the exchange's troubles spread. Right now, if this sounds familiar to you, and you found yourself in a situation where you were invested in FTX or these tokens, and you were unable to get your money out, or if you just invested in FTX at all and you lost, please leave me a comment down below. Okay. So let's go on. I want to read just one of these to you. There's several of them, but I'm just going to read this one. It says right here, it says, a lot of us feel cheated, right? So actually, let me just start here. It says, here we speak to some of those retail investors about the huge sums they were unable to withdraw, as much as $110,000 in one case. All of them spoke on the condition of anonymity, okay? Which you can understand why. It says a lot of us feel cheated. William is is one of the retail investors. It says a construction site manager from California was woken by a text from friends about potential trouble at FTX in the early hours of November the 8th. At the time, the 40-year-old had about $85,000 of fiat currency on the exchange. Plus, he had 3 Bitcoins worth somewhere totaling around $55,000 and about 10K in other altcoins. A significant chunk of his assets. A significant chunk of his assets. Let's go on down here and let's continue this. It says, I opened the FTX app and tried to take it all out. Gets a text from some of his boys, some of his friends, letting him know exactly what's going on, right? Sounds familiar. I believe Sam Bankman-Fried let some of his buddies know exactly what was going on November the 5th, November the 4th, right? When they were able to extract some $6 billion out. But here's William, right? It says, I opened up the app and tried to take it all out, but the fiat withdrawals were limited to only 25,000. So I did that and was told to wait 24 hours. You see the struggle it is for a retail investor, right? Because we're the last to know. When the music stops, most of the time we don't have a chair to sit in. We're left trying to figure it out and pick up the pieces. He says that when I tried to withdraw the Bitcoins, I got an error message. Over the next few days, William was able to make one $25,000 withdrawal and convert his altcoins to Ethereum. I lost $60,000, and wherever my 3 Bitcoins would be worth now. Who knows what Bitcoin's going to be in a few years, right? That $60,000 may be millions down the road. It says, I had plans to build a new family home with that money. We're not going to be out on the streets, but it hurts. We've all been there. I lost a lot of money. No, I'm not going to be out on the street, but it hurts. I can assure you that. He says he can tell anyone because it's so embarrassing, but the collapse has not changed his views about crypto. I still think this is going to be the future. These bad actors are not going to stop the technology going forward. I just wanted to share that with you, StockFox family. I feel for William because I find myself in a very similar place just like him, which is the very reason why I wanted to share. I wanted to share this article with you, right? I think it hits home. I think we can all relate to where William is right now when it comes to the crypto space and losing money, right? Money that he didn't have to lose, hard-earned money, right? Hard-earned money that he and his family were saving so that he could build a home, right? There's tons of stories out there like that. There's another one from Laura here, a data analyst. I'm not going to read another one here, at this time, but I just wanted to share that with you here. I'm going to jump over here now. Oftentimes we hear from Jamie Dimon, and he is a pessimist when it comes to the crypto space. And to be honest with you, I'm oftentimes, I want Dimon to be quiet about the crypto space of negativity, especially if you're not invested in it yourself, but he seems to take the shovel and throw as much dirt on the crypto industry as possible. Now, bad actors such as Sam Bankman-Fried certainly gives him an opportunity to gloat when things like this are going on. here is just one of the articles written earlier this year. It says Jamie Dimon calls dangerous crypto a decentralized Ponzi scheme that's not good for anybody. Well, sometimes it's hard to argue with Dimon when you see people like Sam Bankman-Fried out here doing what they're doing to our industry. But there's still hope for our industry. And I'm going to tell you the reason why here, and I'm about to wrap this up. This is important. I want you to listen to this right here. This article, this is a recording from Maxine Waters, who is basically U.S. Representative Maxine Waters, who chairs the House Financial Services Committee. Now, she joined Closing Bell on CNBC here, and I'll let you listen and tell me what you think here about what Maxine Waters had to say here, or Congresswoman had to say.
I'm pleased to be with you today, and I'm anxious to talk about the fact that we in my committee have been working, we've been learning, we've been planning, and we're on top of the fact that we need to have regulations for cryptocurrency, and we're moving toward hearings on FTX.
Do you regret the fact that it hasn't happened so far, and this could have potentially been prevented?
Well, what I'm pleased about is the fact that we are far ahead of many other countries in taking a look at cryptocurrency. It is very complicated. We have members with a lot of different thoughts about it, but McHenry and I, the ranking member, have been working closely together so that we could increase the learning and get many of our members to have a basic understanding about cryptocurrency, even though we started with stable coins and we're moving very rapidly on that. We too have been focused on creating roundtables and task forces to deal with what we have to do to develop regulations on cryptocurrency.
I just wanted you to listen to what the Congresswoman had to say here in regards to cryptocurrency. So as you can see here, just listening to that right there, our Congress here is basically, in our House of Representatives, they're already out front here, okay? Maybe they can't stop the Sam Bankman-Frieds or whoever the next bad actor is going to be. Maybe they won't be able to stop that one. But I do have hope that in the future, right, that at some point we're going to get some regulation, some much needed regulation around the cryptocurrency space. I don't think we can survive. I don't think the cryptocurrency space can survive without it. I know that there are those out there who will say, you know, we don't need regulation in the crypto space. Cryptocurrency, was not, created to have the government's involvement. I agree with that, and yes, a lot of that is true. But we have proven, right? These bad actors have proven that if you do not regulate them, right? If you do not have a checks and balances here, that these bad actors are going to keep coming and they're going to keep going. And our industry and Bitcoin is never, ever going to see its fullest potential. That's what I believe. So I'm applauding Maxine, the representative here, Maxine Waters, for her commentary, and that they are already beginning to do their due diligence when it comes to the cryptocurrency space. And I'm hopeful that we're going to have some regulation on this sooner rather than later. Well, StockFox family, I hope that you got something out of this particular content. And if you did, please leave me a comment down below. Don't forget to hit that like button. And if you haven't subscribed to the channel, please take this opportunity at this time to subscribe to the channel and consider supporting the channel using one of the links down below as well. Well, that's all I have for you today, StockFox family. If you can think of anything else or any other additional comments that need or anything around this that I didn't discuss, that you have some information that you would like to share, please leave that down in the comments down below, and I'll see you in the next video.